Hi guys. We're going to talk about mortgage today. I'm going to dive right into it. Mortgage is probably the biggest monthly expense you have. If I say that, I think 95 or more than 95%, that's a correct statement, hands down. Um, so if you can save part of that mortgage money, right, that would be a huge saving. We are on a roll. Like last few weeks, last few episodes rather, we talked a number of points that you can save money. 150 plus points we discussed in the last few episodes, and now we're going to hit the biggest piece of all. That's a mortgage. There are so many ways that you can actually save your mortgage payment that you really don't know. Some people may already know, but really don't put an effort to it. So we're going to talk about those ways. Probably within a 10-minute period. Please feel free to drop your questions in the comment boxes because we might not be able to cover everything within this short period. So Venkat.
Yeah. So the main thing, guys, with the mortgage, there is a one simple thing you can do. One call, one phone call, maybe one, go to
Yeah.
online and do one thing. You're going to save 5 years worth of payment. Uh, if you're paying $1,000 a month, if you just do one thing, right, that's going to be $60,000. You're going to save $60,000 because that's a 5 year worth of payment. Instead of paying things in 30 years, you will be paid off by 25th year. That's what that one thing will do. Let me tell you that one thing. You just have to do bi-weekly payment instead of monthly payment, right? So you're paying $1,000 a month, right? $1,000 a month. That's your mortgage payment, everything included. Instead of paying once a month, pay $500, $500. That's all you need to do. But you have to do it bi-weekly, guys. Like let's say every Monday, every other Monday. Every other Monday you pay $500, but it's gonna be around like 28 days, right? In the month, 28 days, you'll pay around $1,000. But what happens is if you do 52 weeks in a month, in a year, 12 months in a 12 months in a year, 12 payments in a year, instead of 12 payments, you're doing 52 weeks, 26 payments, right?
Oh, correct. Yeah.
26 payments of $500 is equal to $13,000. Instead of $12,000, you're paying $13,000.
Right.
What does that tell you? Like one payment extra. You're paying one extra payment, but you're stretching it out for the whole year, right? You won't even feel it. You won't even feel that pressure, extra pressure, because you're splitting 500, 500. That's it, right? That is several, like, you just have to call the mortgage company, make sure you can change it to bi-weekly instead of monthly. That's all you have to do.
It's a simple phone call, Venkat, like you said. And when I called on one or the home near you, they said that they're not able to do it on their payment platform. So what they suggested instead was call your bank from which you're actually making the payment, so you can arrange that way. So if you, let's say you have the mortgage with ABC company and you go to their website and make the payment, they might not have the split transaction option. So all you have to do is you have to get a form or something and you fill it up, send it to them, and they will either set it up that way on their platform, or if you're using XYZ bank to send the money to ABC
Most of
bank.
the major banks will have option to do it online itself.
Yeah, but I went through this with the current one.
Smaller
So if
bank.
you run into that situation, it's another very simple phone call. You might have to push them a bit. As we always aware, certain things you have to push them, and then you'll be able to get it done.
But another easy way, if you couldn't do that, just pay one extra payment. That's it. Like
Oh
once
yeah, that's right.
pay one extra full payment, $1,000 extra. Whenever you have extra money, just go
Towards
and
the principal, you mean, like that's to bring down the principal amount. That's
yeah.
what
You
you're
just
saying,
pay
right?
the $1,000. It goes into the principal, and then
Yeah,
you're
actually, for that they have the option. If you want, you have to check
yeah.
mark that little box. You're paying extra principal,
Yeah.
and that'll do wonders.
Yeah, that's the first step, guys. And then next thing you can do is refinance. Right, refinance. The current rate is 2.35. Who
Yeah,
would give you 2.
all
It's
time low.
almost like inflation rate, right? And it's 15 years. Also, you can shop around to get even less. I know Quicken Loans and some other they try to give you even lesser the competitive rate compared to other. If you get some other rate from a different bank, and you can take it to another bank and negotiate, you take and then they will give you less than that.
Yeah.
Then take that and negotiate with another bank,
Right.
right? So you can do lots of play
So
around.
so that's not a simple phone call. You might have to make several phone calls, and like you said, compare. And the best part is, Venkat, like you might be you might be a little worried about the credit score. Like if you go for one credit like Quicken Loans, they run the credit, and you
No,
know
45 days you can do
45 days.
as
That's what I
many
want to.
pull as you
Yeah.
want. It'll all consider as one in the algorithm. So try to do everything within 45 days.
Yep.
Some people call it 15 days or 30 days, but 45 days is the one that I saw from Credit Karma.
Mhm.
So just try to do it within that 45 days time period. Even if it goes beyond, that's okay. Like, for this kind of a mortgage shopping around, it's not going to affect too much. There is a 10%, if you look at the FICO, my FICO, there is a 10% for every 10% affect, it'll affect up to 10% of your score, but not up to 10% if you just do one extra, right? One extra, but I'm talking about like 10 pulls. If you do 10 pulls, maybe you have some of score will go down a little bit. A few points, not, it's going to come back again once you
It's gonna come
mortgage.
back up. Yeah. Yeah.
Yeah. And that's a
Because Venkat, it's not like you're defaulting a payment or anything, right?
no,
And you miss payments,
shopping
and
around.
credit you've not been paying
That
your
has a
cards.
higher weightage. The one missed payment has a higher weightage in that from my FICO. This
Yeah.
is only less than 10%.
Yeah.
And yeah, well, the refinance, just go ahead and go with shop around, get the refinance done. So once you refinance, I actually save around $300 for the last 4 years. Last 4 years, every month I'm saving $300 because I refinanced to 2.5%,
Yeah.
right at the time. So even now it's even less. I can get maybe 2%, right? But the savings is not that much. I'm not doing it. I'll wait for more time to, the new presidency comes in. I don't know. It may even go down, or who knows.
And imagine, like, you said, I was just trying to do my math. Imagine you save $300 by refinance per month. That means 3,600 per year.
Per year.
Imagine what you can do with $3,600, guys, because we just finished our previous episode about Bitcoin investing, and imagine the money that you can invest on M1 Finance, robo advice, like all these investment opportunities are just calling for it. Yeah, you have $3,600 savings. Just don't put it in a regular savings account. You can actually invest them in the investment opportunities that we've shared before.
That's right. Yeah. And third one is like, if you look at the mortgage, right, it's a PITI, principal, interest, tax, and
Tax
insurance.
insurance.
So where can you control like, you just control the principal, right? Like you paid bi-weekly instead of monthly, you control the principal, like, and
Bring it
then
down.
you also do a refinance. When you refinance, the rates are less, and then the principal will be different. And then if you do 30-year instead of 15-year, your principal will be less. And all those things, you can control that with the principal. And then the PITI, right? PT, the principal, interest.
Interest,
Interest,
tax, and
also you can control the same way that we just talked about. Principal and interest is both the same thing, goes along with it. But the tax, you cannot control. Whatever the tax,
yeah,
one thing you can do is make sure your square footage, whatever they're telling you to pay, like they will pay, oh, this is your, they sometimes put a higher square footage, or maybe 500 square foot higher. Make sure it's matching up with your house. And then if your square footage is higher in the county, right, county data, you can actually go and appeal them and then reduce that, and your tax will be less, based on that. That's the way you can control it, but no other way. And then the insurance is, you have control over insurance, right?
yeah,
You shop
absolutely.
around, like we said.
Yeah, yeah, definitely. And the insurance is so I actually, for this house, I shopped around, and I actually reduced it by 100. So I used to have 136, and it came down to 65 with the same coverage.
Wow, yeah.
Imagine, like, that's almost $70 or $75 a month, and per year it's almost like $1,000 right there.
Yeah, yeah. Actually, one secret is that insurance agent, don't go with the bigger company like,
Yes.
smaller insurance agent. Look on Google, smaller insurance agent, I found somebody smaller, and that person gave me like almost 60% of the original one.
Yep.
Um, so I
That's
saved
exactly what happened to me too. Like the insurance company that I use, that no one has ever heard of. And I was actually, surprised that they offer the same deal for a lot less price, able to save $1,000. And like you said, you can actually, without making a whole lot of effort, you can find ways to save on the principal, interest, and insurance. A little bit of work on the taxes, but still, it's doable.
Yeah, yeah. And let's move on to the fourth one, right? Fourth one is called house hacking. And right now, my mortgage is free. Like I'm not paying. We are not paying anything because we have, even we are getting extra cash flow because of other houses, other rentals that we have. That cash flow is coming in, and also we reduced our interest rate and all those things, right? This is not house hacking, but house hacking is something you buy. Let's say you have a townhome side by side, or duplex side by side, or triplex side by side, and you buy it. You should be able to live in one of them, your family, and then the rest of them can be rented. Let's say the your mortgage is $1,500. The rest of them, the pay they pay, right? Like, let's say the two of those units pay 750. All right, you take their rent, pay your mortgage. Your house, the third house there, is free to live.
Yeah,
That is, you won't be even paying any mortgage at all.
yeah, that's true.
That's a fourth one. That's called house hacking. You can do multiple ways with that. You can even buy a rental property, extra rental property, and rent them up, and whatever the cash flow come up, you pay your house rental, your house mortgage. It'll be almost free.
Yeah.
The cash flow, whatever the cash flow comes in. So you will save a lot of money on that way. That's another hack you can do. I think, yeah, if you just do all these guys, like you're going to save a lot of money. That money you can multiply with the methods that we describe in other episode, right, Brandon?
And Venkat, what about the PMI? We want to talk about the PMI.
Oh yeah, that's another one that yeah, I almost forgot. Yeah, good point.
Yeah,
Yeah, PMI
that's a big
is
one.
private mortgage insurance. But the
Yeah.
thing is, I don't pay anything. I never paid PMI.
Because you pay up 20% is nothing.
Yeah, no, no, no. Yeah, yeah. So the
Uh,
PMI is a private mortgage insurance, and
yeah,
you have a other loan like FHA loan. You have different, just
yeah.
like that, different one.
And guys, just so you know that the insurance that we just talked about was a hazard insurance. So this insurance is the private mortgage insurance where if you have not paid the 20% down payment, there is an insurance on that too. So if you have made the 20% payment, that insurance is not there. So this is
Yeah, that's
totally
right.
different from the hazard insurance.
Yeah, yeah, and actually, I remember now one of my clients, because I do real estate transaction too, right? One of my clients was paying only 15% down payment,
Mhm.
and then that clients actually had a PMI added to the mortgage.
Yeah.
That was like almost $200, and
Oh boy.
I negotiated to the lender. I told that person that how to remove it, and then that person actually suggested we can prepay. So what I ended up doing it, I took some of my commission, I prepaid. It's only for 2 years I had to prepay. 1.5 year or 2 years, it's just like a $2,000, something like that. I had to prepay extra, and the PMI is gone.
Wow.
So that's another way, guys. Like if you prepay, just talk to the lender. Can
Mhm.
I prepay like $2,000, maybe $3,000, instead of paying $200 a month? That's almost like $2,500 a year, right?
Yeah.
So if you just pay that for 1 year prepay, right, they will take it out even when you do a 15% down payment. The other 5% could be like 30,000, right? 20,000, 30,000. But instead of putting that in, you just pay 2,000 extra. It's down the toilet, but you still have no PMI on it.
See, that one is a good one, Venkat, because normally people what they think is okay, if you don't put 20% down, if you can do only 15%, yes, we will be paying PMI. But still, you can negotiate, you can ask to prepay. That's a good one.
Yeah, yeah.
And
Just ask to
people,
prepay. Yeah, yeah. You
yeah,
just ask the
that's
lender.
kind of unheard of, like, unless you really do some research. So that's a good one. Talk to your real estate agent, or you talk to your lender and see if you can prepay, and then they might be able to take it off. That's a big saving right there, by only putting 15% and prepaying the prepaying for one year worth of 1 or 2 years worth of insurance.
Yeah, exactly. That's it, guys. And also, like another way, maybe I'll add one more point on that. If you put a lot of money, maybe 20, more than 20%, right? I try to put like 30%, 40%. You get like a more interest, less interest, very
Hmm.
less interest. If you tell them that I'm going to put more than 20%, your interest is going to go down,
Yeah.
like maybe 0.25%. And if you say 30%, like even less interest, and that's like, if you have money, if you can put the money, extra money, right, I would say go ahead and put it. And because eventually you're going to save a little, for the long
Yeah.
time. That mortgage, it'll be like $50, $100 less every month. That's worth it.
It's worth it. It's well worth it.
Right? Yeah.
Great. Thank you so much for sticking with us. He shared about 5 to 6 points today. Great points. Some things are probably unheard of. Some things you've already heard of, but really haven't put much thought into it. But hopefully, you used this episode as a reminder service, as I always like to call it. And if you like the video, please like, share the good word, and hit the bell so you can be alerted on the next upcoming episode. So thank you so much, guys, for sticking with us.
Thank you, guys. Bye.